Well, hello there, everybody. Michael Silva. That right there is a thumbs up. Make sure to hit it. This has only happened about 4 times this year. That's what we're going to talk about on today's stock market brief. Going to keep it to the point here. What are we looking at? We're looking at the NASDAQ, new highs and new lows, right? The NASDAQ composite's made up of many, many different stocks. And what this chart indicates here is it tells us, okay, so how many new highs are there versus new lows? Are there, if it's above 0, there's more new highs than there were more new lows. By what amount? It'll tell us the amount, 18. But as you can see through the chart, we've been getting a lot of new lows versus new highs. Go figure, right? It's been a bear market. But what I found interesting, which, by the way, this is typically bullish. You want to see more new highs form. You want to see it hold those levels. But what I found interesting here was when we started getting into positive territory prior to this, you can see here and here, we didn't stay there for long, and it was coming from a very aggressive, sharp rally. That was the Santa Claus rally right there. This was the March rip up that, everybody was saying, okay, the bottom's in, and then the bottom wasn't in. And now we're getting a very same situation. It's a very, very overextended, strong move. Many stocks are getting squeezed, and now we finally got a positive new high, new low reading, and we haven't even seen the market digest this move yet. So it's something somewhat concerning. It's something also could be potentially bullish, but I just found it interesting to overlay this here to show you, okay, well, what happened the prior times. In the prior times, it continued the down trend. Now, what happened today in the markets? It was a whirlwind of fun. You can see here, fund? Did I say fund or fun? Fun. We stayed within the hourly opening range the entire day. It just ping-ponged back and forth. If you're wondering what these lines are up here, that is just, this is the opening range, breaks out to 1, breaks out to 2. It's the same distance, 1, 2. Sometimes I mark those on my chart just to help with direction. Is it a range day? Is it a trend day? What took place in the 11 sectors that make up the S&P 500? Absolutely nothing, right? Technology led the way up 0.46%. It's pretty much just a really boring type of day. However, energy was down another 3.71%, getting hit and hit hard. And that's why the S&P 500 didn't manage to close in the green, because that is a big, big move to the downside there, suppressing, even though that we saw, XLY in the green and technology in the green. Even if you take a look at oil is now cracked down, following through on that big volume break. It does look like 85, some further downside is a potential area. When this break was originally taking place, this 100 period moving average, or this little bear flag, I can't really remember, but we said the 200-day could break down to there and then potentially kind of travel around a little bit. And now we traveled around, bear flag, broke down, and now it does seem to me like we can potentially run into this area where we'd see potential, a little bit more support. It's not necessarily going to be support, but it is a level of interest, given that it was prior resistance, and resistance can become a level of support. If you take a look at the dollar came off. It was looking pretty decent yesterday, but sunk off today, and gold shot up like a rocket ship, which is more of a risk-off type of behavior. We saw gold really perform. We even saw bonds perform pretty well today. If really quick, I'll pull up TLT. TLT was only down -3%. The S&P 500, right, was down -0.08%. So technically, TLT outperformed the S&P 500. So it still has kind of this, risk-off type of feel to the markets as of right now. If we take a look at the dollar, still within that bull flag context, and just take a look just at how much of a negative correlation these have with one another. So if the dollar starts moving up higher, it could very well just take a big crack to the S&P 500. And if the dollar wants to continue to perpetuate, a lot of people are calling that the dollar's already hit its top. What would look like a risk-off type move? You have to pay attention to bonds, because bonds, like I said, are starting to set up. And as we can see here, it's an inverse head and shoulder smiley face pattern. And if it starts getting above 120, maybe we can see more of a pop there. But remember, the weekly expected move was already tagged, came back to hit that 20-day, and now we saw a little bit of support. This is all happening too, by the way, on a massively inverted 10 and 2 yield curve, and the 10 and 3 month is still positive at 18 basis points. But it could very well get slammed tomorrow come those job reports. What else do we got going on? Well, the Fed assets, right? The total assets has been on a massive run up until recently, right? They are tightening. So if we zoom into it, what's taking place? This is updated weekly. We hit our peak right there, and now we're starting to ebb and flow. go a little bit lower, and you can see the latest print here, which was yesterday, we did see a little bit of a reduction. So what do we got going on tomorrow? Like we already stated, non-farm payrolls, unemployment coming out. Consensus is estimating, which by the way is lower than the prior month's consensus. And the previous number was 372, which was above consensus. Now consensus is lower. We're going to see what we get for the actual non-farm payrolls report coming an hour before the market open. Consensus is estimating there 3.6%. For unemployment rate, that's going to be another big one. The previous was 3.6, and I believe even the one prior to that was 3.62 as well. So be on the lookout for that. An hour before the market open, let's take a look at some of the charts. As you can see, we didn't do anything today. 5-day moving average, though, is starting to creep up to the price action. All right, last time I did that was over here at this level of resistance. I mean, it's done it over here too as well, but we haven't seen actually a digestion yet. And this is, where you want to be a little bit more cautious. I think if the market interprets it as good, I think 420 is definitely within reach. That's the weekly expected move. We still have a negative divergence building in both the PMO and the RSI. Okay, so as it stands right now, it's bullish until proven guilty, right? Innocent until proven guilty. If the 5-day moving average gets cracked, start looking for it to be a potential area of resistance. But as it stands right now, the bulls are still in control. So I want to reiterate that despite some bullish narratives that are going out, the bulls are still in control. If you take a look at the Qs perpetuated up 0.5% today, just hanging out at that weekly risk range, right? We tagged it. We're just hanging out there, and we could very well hang out there. Now, if the SPY gets this mind-blowing, push up to their weekly expected move, this is going to have to rip up higher and close Friday outside of it if that's actually the case. But as it stands right now, we have a negative divergence building in both the RSI and PMO, and we are above a very steeply inclining 5-day moving average. So we'll see here if we can get some sort of tag, see how it responds. Maybe it'd be a good area to potentially buy the dip if it starts seeing some strength, or just wait it out and just wait for, some sort of digestion, bull flag, or, pull back, and then, try to come up and re-break out to some new highs. But as it stands right now, every day that passes, right, this is going to start, going up. And if this starts coming down, it's going to start flattening out. And if price starts getting below it, well, that's where it can become a little bit more bearish, but we're just not there yet. If we take a look at the IWM, negative divergence, far off from the upper weekly expected move. So, if the report, like I said, if things come out good, we can see a nice big pop. AMC, it's a big component, and they just reported earnings. It tagged the lower expected move for earnings today. I posted that on Twitter if you want to see the chart, but it's down around 7%, and that can change, right? We can wake up tomorrow and it could be up for all we know. But as it stands right now, we are still in this very, very tightly wound up rising wedge, just like we were over here, but we are still trading above that 5-day moving average. So once again, the bulls remain in control. You got to be patient. As time progresses, this 5-day moving average will obviously change, and the closer the price action is to it, it's going to start flattening out more, and if price gets below it, like I said, then it can start curling down. So that is what we need to pay attention to moving forward. Now, a couple of indicator charts. I did find this interesting, the NYSE advanced decline line. If you're not on my Patreon group, I actually posted the advanced decline line issues, and I talked about a thinkorswim indicator that's part of that. To look at it daily intraday, because it can help find shifts in the markets using positive and negative divergences. And I just want to call this out from the daily time frame. We have a high to a lower high. We have a high to a higher high, which basically says, hey, the advanced decline line. Now, this is looking at the SPY. I don't mind looking at the SPY along with the New York Stock Exchange, but it's telling us that there are a lot of internals that are weakening as the broader market over here is perpetuating to the upside. So a little bit of a negative divergence. Also, the housing index, I haven't showed this one for a minute as we've been getting a big rip, right? But I want to call it out now. The housing index has been moving a little bit lower. It was up nicely today, so this can change, but the S&P 500 has been perpetuating higher. What is that? It's a negative divergence. It's happened here on that recent rip right over there, and it's happened over here, right? So we've had one right there, and versus right here, and then we also had this notification over here at the market top where the S&P 500 perpetuated higher, but we did not get a confirm from the housing market. And this is very similar to like 2008, where the 2008 market, the housing market actually peaked way ahead of time. And what's interesting here is we're seeing something kind of similar, not to say it's going to have the same outcome, but we peaked over here in May, And you can see the market continued perpetuating itself higher, and then we never actually broke this high. So there's a massive divergence. There's all kinds of divergences taking place. So that's why it's important to pay attention to them. If you're late to the party, well, now we just got to move forward and see what is taking place currently and shaping up. Now, last one over here is the NASDAQ composite bullish percent index. And you can see here we are at an 80.52 reading on the RSI. So we're seeing some super strength. But remember, this is going to have to digest. It's going to digest, and we're getting a lot of FOMO buyers into it. I know we are. We're going to get continued short coverings, and that could perpetuate it even higher right there too. So be very careful in this environment. Like I've always previously stated, right? It's not an area where I would go long. If you look at things from a risk to reward standpoint, the reward to the upside is about that big, and the risk to the downside is quite large given the context of various charts that I'm looking at. So just be mindful of that. It could change, obviously, if we get some sort of digestion, which we'll talk about on the show. Another thing that I want to call out really quick is Bitcoin to gold indicator. It is now at a 4.51% reading, so it's still above zero. It is still on an active buy signal, but it is starting to turn down. Just as I say down here when it starts turning up, I say, hey, some people like to front run the signal. I don't front run it. But I know some people that do. This could be potentially front run. This would be on the short side, but be careful, because if you're shorting in this market, especially around crypto equities, you're talking about some high short interest stocks, and those like MicroStrategy, right? And those things you can wake up tomorrow and it could be up 20%, and we'd still be on this buy signal, right? So be aware of that too as well. That's why I wait for those signals. Also note, right, if the signal crosses and you get in a confirmed signal, you could miss a big portion of that. Okay, it goes both ways. So you just gotta just don't go YOLO anything. All right, just be aware of your risk. Manage it closely, right? You have hard-earned capital. Why throw it away if just manage the money? I don't know what else to say, right? All right, last thing before we go is the zones. Okay, this is part of something that I share with the swing trading, and I posted on these videos. I also do the S&P 100, the zones for all the S&P 100 stocks, and I share them here. This is just to help manage risk. This is just a small piece. I don't even have it on the list of my Patreon, which I note, right, because I'm still testing it out. I'm still working with it. And then you get to see my notes along the way while I do it. I also give weekly expected moves on about 40 different products. I put out trade ideas, have my watch list that I post there too, and so forth, all kinds of good stuff. And that's $9 a month. It's not $199. It's not $1,000. It's basically a cup of coffee and a double smoked bacon sandwich from Starbucks is what that is. And you also get to obviously be in the Discord community. And if you don't want to pay $9 a month, like I don't like a bunch of subscriptions, you can just pay annually, 16% off. And you get a discount doing that too. It ends up being like $90 US. So a couple of things that I want to note on the zones really quick. Oh, and really quick, actually, by the way, I always forget to mention this, but the longer you wait on this $9 per month, Patreon charges at the first of the month. So if you get into this monthly thing, on the 15th, right? Okay, it's only the 4th right now. That's why I'm talking about the Patreon so much, is because I like people get in early so they don't buy it on the 28th and then they're charged again on the 1st. All right, and it says that during checkout. So be aware that that's just how Patreon works. They charge on the 1st. I don't know. Okay, I don't get it. But if you do that annually, obviously that's different. You pay for a year up front. Okay, the zones. 2 notes that I want to make. S&P 500, the first time in a while, in like 9 trading days or so, the low end actually went down. Wow, what do you know? Now that could change come tomorrow, but I haven't seen it. It's been on a move up higher, and also with obviously the upper range too, which being at 4260. Has been moving higher too, but for the first time in a while, I saw the range actually tick down, and that also now matches the VIX. The VIX, interestingly enough, this has actually been going up for since the start of August. So the lower end of the range is picking up. Yes, the VIX is getting crushed, but this is also moving up, and the high point is coming down a little bit, so we're seeing contraction right there, right? It doesn't feel like that, but the zones are saying, hey, we're starting to see contraction, and contraction leads to expansion. And I don't know if you've ever seen the VIX expand to the upside, but it can get crazy. That's all I got for you on today's episode, everybody. See you later.